Hi everyone, let's have a look at my bullish and bearish medium time frame and low time frame Elliott Wave scenarios on Bitcoin, starting with the bullish medium time frame scenario where we've been looking for a three-wave structure in an ABC where the most common target area for a wave C is between the 1 and the 1.236 trend-based fib extension taken from the high of A to the low of A to the high of this wave B. And you can see price wicked perfectly inside this target box for then a bounce to the upside. So that is very nice. I do think if this low is going to be taken once again and price moves down, then most likely the yellow target box is going to be hit, which sits between 24,850 and 24.3k, which is an important support area if price moves to the downside. But honestly, I wouldn't like to see price move to the downside, as this count over here fits a nice 5-wave structure and then a potential wave C. So upside is definitely preferred in this scenario at the moment, but the invalidation of this being an ABC is all the way down here, as the 1.618 is still a rare target for a wave C, but more commonly, of course, this target box is the target. So that's why the stop loss for the potential trading setup is below the 1.618 as well, and preferably price is going to continue its way to the upside. Now you do see two fib times over here, the 1-to-1 and the 0.618, which is important because in Elliott waves, the waves don't only have a price relationship, but also a time relationship. So if we compare wave A with wave C, we have the price relationship being the target box that you see over here, but you also have a time relationship, and that's the fib times. And I like to see a wave C end between the 0.618 and the 1.618 fib time taken from the high of A to the low of A to the high of wave B, which basically means that in time you are comparing the time it took to develop wave A with the time it takes to develop wave C. And this wave C ended about 61% of the time it took to develop wave A, which is absolutely fine. So that's actually very nice. So definitely looking in this scenario, right, for this in this particular scenario, looking for more upside, where the potential trading setup was entering in the target box, or basically the 1-to-1, stop loss below, looking for more upside to come, where I do think that we have very, very interesting highs here at about 30k. We have a triple top, 1, 2, 3. So there's definitely some interesting liquidity resting above these highs for potentially a grab of the liquidity and a continuation down, or a continuation, of course, to the upside. If we then look at the confluences that I have over here, or at least the range, I suppose, I've pulled a volume profile from the range starting at the 17th of March. And you can now see that price is trying to find its way inside this volume profile. So first of all, we had a order block over here on the 4-hour causing some resistance. Eventually we passed the order block, but found our resistance at the value area low of this range, the blue line over here. But now with this last 4-hour candle that has already been closed, price now closed inside the value area low, or basically inside the volume profile, I should say. It hasn't necessarily backtested the volume profile or the value area low yet, like the blue line, but it is inside of the value area right now. So one could potentially look for a continuation to the upside, where they always say trade the range until it breaks, basically, where if price is going to continue its way to the upside, a very important target is the point of control at 28k, and then the next target to the upside is the value area high at 29.2k. And then basically what this is going to be is again a little bit of a move to the downside outside of the value area, just like we had over here, head over here, head over here, and then eventually continuation to the other side of that value area. Now then again, it hasn't yet necessarily backtested this area. It did over here, for example, but we have to wait and see. It is now inside the value area, so a move to the upside might be interesting, where the stop loss for a potential setup, say better safe than sorry, is actually all the way down here. Now of course risky wise you can move it to the upside, but safer wise it can be down here if one expects a longer, bigger move to the upside, where still, in my opinion, the 2022 range highs is quite an interesting target and still of course haven't been taken. So yeah, maybe if price continues to the upside, even with a bit of a longer stop loss, it is still a 1-to-3 RR, which is actually pretty nice. Just make sure you stick to your plan, your own strategy, whatever it is you're looking for with the entry requirements that you have. Maybe you want to see a break of market structure, some bullish divergences, whatever it is that you want to see. Maybe a backtest of the value area low, because of price can always still do this. If it backtests the value area low and it doesn't hold and continues down, then yeah, you know, that also happens. So make sure you stick to your plan and your strategy. If we then go to the lower time frame scenarios and we switch to the 15-minute, we've been in a range for quite a while now. And the bearish scenario is that this move over here is a 3-wave structure expanding flat in a wave W. Then we have this to be a 3-wave structure in a wave X, and then we're looking for another 3-wave structure in a wave Y, where if I open the target boxes, you can see that we have some resistance over here, which sits between 27.5k and 27.7k, and this is also in confluence with the potential target area for a wave Y, which is quite common, which is between the 1 and the 1.236, which sits between 27.4k and 27.6k. So this is definitely an area of potential resistance in the bearish scenario, where this then is the WXY, after which one would then expect a move to the downside, right? That's then eventually the low time frame scenario of a higher time frame bearish scenario, basically. So this area of resistance is definitely important, and this being then a 3-3-3 wave structure corrective, after which you expect another impulsive move to the downside. Whereas in the bullish scenario, you expect this to be the low of something. Then this is a wave 1, and then a 1, 2, 3, 4, 5 wave move to the upside. And then we have wave 2. Now there's two options for this wave 2. Either this is the 3-wave structure and wave 2 ends over here, or this is a first 3-wave structure, a second 3-wave structure, and this is the last one. So then you have basically a WXY, which then is a 3-3-3 wave move, where then the low of wave 2 moves over here. And this impulse to the upside, where also, as you can see, volume has been increasing as well during this move to the upside, where this move to the upside is then a wave 1 of a bigger wave 3, because with this impulsive structure, you then expect this to be a 1, 2, then you want to see another 5-wave move, and then a 1, 2, 3, 4, 5, and then a wave 3, before then a 4 and a 5. But this is of course the impulsive scenario, and then a 1, 2 expecting much higher prices, which also fit then the bullish scenario that we have on the medium time frame. But the first price has to move through this target area between 27.5 and 27.7k. And actually, if I zoom out a little bit and talk to you about the bearish scenario on the, I suppose, medium time frame, which I haven't really shown. I of course spoke about the bearish scenario on the low time frame, and this then being a potential WXY with the target box over here for potentially more downside. Now, if price is going to move to the downside, we at least have to keep our mind open, I suppose, for potential move down, which, let me see if I actually have it. I think I removed it from my chart, but nonetheless, that this is a potential wave 1, 2, then another 1, 2, and then eventually a 3 to the downside. If price moves down and volume is increasing a lot, then we might see an impulsive structure to the downside and much lower prices to come, basically. So we have to wait and see, of course, how price is going to develop today. If we quickly have a look at the news for the upcoming week, then tomorrow on Tuesday we have some high impact news at 2:30 p.m. Central East European time, so you might want to check your own time zone. So Tuesday might be a volatile day, as well as the Friday over here at 5 p.m. we have Powell speaking, which might create some volatility as well. So make sure that around these high impact news times you trade very safe with a very clear plan, clear strategy, and stick to your entry requirements. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame scenarios if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.